Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Viewing the Australian dollar, the bullish momentum has shown little retreat in terms of how the market's risen, with the US dollar extending its tumble on Friday, hitting a 1 month low of 101.43. Now gives further upside potential to 71.55 challenge and maybe even extending onto 72.15 to 72.60. Investors anticipate that the US Federal Reserve interest rate hike could slow or even pause its tightening cycle in the second half of 2022, after the recent minutes has made the market feel a little bit at ease and therefore sending the US dollar lower. Any pullback for the Australian dollar sees support around 70.85 to 70.30.35, but in light of the RSI and also the strength of the MACD, does support further cases that we could even see the rally on towards the 60-day moving average seen around 72.60.65. With the euro topside reached at 107.40, now sees a slight extension to 107.85 to 108.45. I do like the way the technicals are showing here, but do keep an eye on this RSI in case we see a bit of bearish divergence and therefore could see a snap from this current rally and reverse and look back towards 106.25.35 as a potential target. But in light of how the candles are set up, may actually see this extension onto 108.45 before reversing. As the bears continue to weigh on the support around 127, we are still waiting to see if this market can actually tumble. With the greenback sliding further, as I mentioned, to the lows around 103.43, hitting a 1 month low, the market could actually see further weakness. In this week's economic data, the initial US jobless claims came in at 210,000, which has been an average for the last few weeks or even the last month or two. Along with that, the US economy shrunk more than previously thought in the first quarter of the calendar this year, after the Commerce Department said that the GDP annual rate was negative 1.5 in the first 3 months this year, more than its prior estimate of negative 1.4. It is the first decline since the second quarter of 2020, when the economy was in a pandemic recession. Still, I feel the market has potential to see the dollar yen eventually take on the challenge to 126.55 and then down to 125.95 to 125.40.55. Sterling still holds to its bullishness and reaches its objective, which is a 3-week high around 126.40, and today's high was 126.66. Keep an eye on this pattern as the market holds slowly to this uptrend. We could see a further grind up towards 126.75.85 to 127.45, which is where this trend line holds. That may see a rejection. Still, I like the way the market's holding to a trend from the ADX, and the rest of the indicators are still supporting an upward case. Let's see if the market can continue as we near the end of the week. Finishing off with the last 3 markets, which is sterling Kiwi, the market is somewhat weaker. I still feel we could see a possible downturn that is towards 192 and maybe even lower to the 191 region. Gold rebounded off the level around 1,838.42 and holds to a slightly steadier price action. With the midway point rejected, I feel the market could actually see a short stretch up towards the region of 1,860.62, or where the cap is around 1,870.80, and then maybe see another down test. And finishing up with oil, well, the market is still holding to very strong gains after the previous night, putting uncertainty now in how this trend is actually showing. Looking at the cap around 114.50.70, a break there could give further scope, and not until around 121. So do keep that in mind, as this level is a bit of a key point, and a break there would give further exposure. Well, that wraps it for the week. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.